Hi, welcome to the Market Alert for Friday, the 3rd of March 2017. So starting off with the daily chart, we can see that yesterday the market was sideways to lower. And let's just have a look at this in more detail. So the market was more or less sideways to higher in the pre-market session. We then had a sell signal, but the market kept coming back through the 21,100 level, if I believe that's the case. So yeah, 21,100 kept coming back through, and that's when I sent out a note to say that the market keeps coming back through. There it came back through, closed there, came back through, and then after I sent the note out, it finally broke and then moved to the downside. But then it became in a sideways range for the rest of the session. There you can see there until we got into the latter part. I'd already given up by this point. I can't say that I did this trade because I didn't. I got bored of waiting for the market to move, and it wasn't moving. Notice also the grey dots are the actual unqualified indicators, so all of the buy signals failed, which is good, and there the market was that tight in a range it didn't even manage to fill either, which is also very good as well. I'd rather have no trade than a losing trade. So the market's still sinking a bit, but found some support at 20,950. And again, if we go back to the daily chart, drawing a few things here as well, we've got let's have a look, 50% below there now, and we can remove this one. So what we're looking for now is the market to head down towards this level. We're still above the 20 bar average, but it looks like at the moment we've got some weakness coming into this market. So just to go back to what I was talking about yesterday, what we're looking for is the market to actually do this, come back, go up, and then go like this if it's going to move to the downside. And apologies for the colour, that's just awful. Let me choose a different colour for next time. We'll go with the red or something. Right, so we've got this situation where we're looking for the market to pull back. We can't do that at the moment because we haven't got it reversing, moving back. But as soon as we have, we can put in the measurement for the momentum back to the upside, and then we'll get a pretty good idea of how the market's going to pan out. Just for the fun of it, I loaded a 4-hour chart this morning as well. And again, just a simple thing with the 20 bar average. You can see how the market came back to it during the up move, came back to it, didn't close below it. And now we're in a situation where we are trading below it. So there is some weakness around in this market. And again, we can use this even on an intraday basis if we wished, as long as the market leaves behind that momentum. We can see how it reacts coming back up, but at the moment it's sideways to lower. It's fine at the moment because we've come back down to this low, and this bar here, the start of this one, is higher, so there's not a problem. But if this low is taken out on this bar here, then we'd have to redraw this. But this way we can measure what the momentum is, and also the 20 bar average has now been taken out in this bar, but that doesn't mean to say that it can't close back and have a run back up to the upside. But by looking at this sort of inside view, as it were, macro view, we can actually gauge what the market momentum is doing internally, as it were. News today, I think Yellen's out today. I did see something. Yep, she is. She's coming out at 6 p.m. to speak. We've got a lot of Fed people out today then. Wow. Starting at 3:15. We got the manufacturing PMI at 3 p.m. and then a whole host of Fed members. Fisher's out, Powell's out, Evans out, Yellen's out. So what to do? Well, see what happens after the first half an hour really on this one. That's a very interesting picture. No doubt they're going to use whatever they say to bring the market back up. Is what they usually have done for the last 8 years. but who knows how the market's going to react. There's certainly, as I said in yesterday's alert, an 80% chance now that they're going to increase interest rates at the live FOMC meeting on March the 15th. That is also the day that it becomes official for the 20 trillion debt ceiling for the US. This leaves them with a 75 billion to spend, and at the moment they're burning 15 billion a month in spends. So as we go towards the summer, we're going to see a major problem because they're going to have to increase the debt ceiling once again, and the Democrats could be a real thorn in Trump's side with regard to this, and see a lot more volatility and a lot more to the downside as well. Every man and his dog knows this market's way overvalued. The implied volatility is also pointing to this as it remains in the lows. And an interesting picture yesterday, even though the market was down, the implied volatility was down, and this shouldn't be the case either. This should have continued to move higher, and my interpretation of this is this, that the pressure was off, the market continuing to move to the upside blindly without any reason or any fundamentals to back it. And even because the market pulled back yesterday, it's taken the pressure off slightly of a bigger correction or crash, because obviously the higher a market goes, the weaker it becomes and the more likely it is to crash. This is just a blip in my opinion as the market moves lower, or should it move lower, especially if the volatility increases, then you will see this switch straight back to the upside. But that's what I'm seeing there. It's more of a relief than anything else yesterday. As I say, these are out of sync at the moment, and I'm not seeing that for some time at all, certainly given that there's no geopolitical reason for them not to be out of sync. So it's again nervousness by and relief for this time. We had a situation here where we've got the market moving higher and the implied moving higher because of nervousness by the option sellers, and then we switch from that, where we have a situation where the market's moving lower yesterday, and also the implied volatility, and that is just relief for the market to say, well, wow, at last, we're getting some sort of breather here. So that's it for today. Let's see what happens with regards to what Yellen's got to say and the rest of the Fed members speaking later on today. Right, that's it. Have a great weekend. Should report in at some point today. Other than that, thanks for watching. See you in the next